So last week we started with relevant costing. Let me just brief you just as a reminder on what we did last time as a refresher. Yes, we said that relevant costs are costs that are directly attributable to a particular course of action. Any cost that will change as a result of the decision that is to be taken are relevant costs. And relevant costs are costs that will be incurred purposely because of a particular course of action that is to be taken. Now, we also said that there are three major attributes of relevant costs. One is future, two, incremental, then three, cash flow. We said that relevant costs must relate to the future. Any costs that have been incurred in the past is irrelevant, and therefore we should ignore it. Then we talk about incremental. We said incremental costs are costs that change between alternatives as a result of the decision taken. They represent the increase or decrease in cost item. Okay, that is incremental costs. Then we talk about cash flows. The cash flow are relevant costs are future cash flows. Okay, relevant costs are future cash flows. That is, they must be a cash item. Any cost that is not related to cash, that is non-cash item, or any cost that does not involve the movement of cash should be ignored. Examples of non-cash item are notional costs like depreciation, amortization, or provisions. When you are given depreciation, amortization, or provision in a question, they are not cash flow. You have to ignore them because they are just notional costs. So you ignore them. They are irrelevant. Then I now call your attention to the definition of terms that you must take into consideration under relevant cost, because it's one of the key things you must understand as far as relevant cost is concerned. Examiner can ask you, what is sunk cost? What is committed cost? What uncommitted cost? What is differential cost? What is avoidable, unavoidable cost? What is opportunity cost? All these things, all these cost items, you must know them with their examples. So, and I said that you should go to the material and read them thoroughly. Okay, when you go to the to this material, you see that, but if you are going to see more of that under the ebook that you have with it, but there are some of you have there. So there are more details, even under cost and the cost analysis. All those things are also explained there. Then I now demonstrated how to identify relevant costs for material and relevant costs for labor, because on the day of your exam, if you are going to have question under relevant costs, the focus will be on material and labor. Of course, every other cost will be there, but majorly where you are going to have challenge is under material and labor. Therefore, how do you identify relevant costs for material? How do you identify relevant costs for labor? Under the material, I mentioned three line items, which represents the current purchase price. Number two, disposal value. Then number three, I mentioned historical cost. I said that the current purchase price represents the amount at which the item of inventory can be purchased currently in the market. When you want to buy material in the market, the amount at which you are going to buy it represents the current purchase price. That current purchase price is also known as replacement cost. And I said that the current purchase price or replacement cost will be used if it can be ascertained that the material is in regular use and will be replaced. Okay, that is when you are going to use current purchase price. Even at that, whenever you are given scenario, an examiner has given to you replacement cost or current purchase price, provided you have those items in the question, then that means you are going to replace the material. Then we talk about disposal value. We said disposal value, also known as scrap value, represents the amount at which the item of inventory held in store can be disposed of in the market. When you want to sell the material you have in the store, you want to sell it, the amount the company will earn from that disposal is what is called disposal value, scrap value, net realizable value, trading value, resale value, whatever the name that is being called is the same thing. So according to, in line with the principle of relevant costing. Disposal value represents a saving to the organization. And I mentioned to you that on the day of your exam, examiner will tell you that the material will be disposed of at a cost and that it is not a cost, rather it's a saving. So you are the one that will interpret it as a saving. It is not a cost, rather it's a cash inflow. Okay. Then finally, under material, we talked about historical cost. We said historical costs represent the original amounts at which the item of inventory held in store was purchased previously. The amount at which a company purchased that material that is being kept in the warehouse. Okay, the original amount they bought it is what is known as historical cost. So historical cost is a sunk cost and therefore should be ignored. It's not relevant. When you are given historical cost of item of material in a question, please ignore it. It's a past cost. Remember, one of the attributes of relevant cost is that it must relate to the future. Okay, historical cost is a past cost, so it's not related to the future, so you have to ignore it. All right, so that is what we discussed last time in the class under material. Then, of course, I also demonstrated it for you diagrammatically drawing this diagram in the class. That was last week. Okay, I draw this diagram. So that is for that. So I'm not repeating the diagram again. You already know that. Then we talk about how to identify relevant costs for labor. Okay, how to identify relevant costs for labor. Under labor, I mentioned two items. I said those two items must be critically examined in the determination of relevant costs of labor. One is idle capacity, then two, full capacity. The idle capacity is also known as spare capacity. And I said that is when an employee is not fully engaged, okay, due to low volume of activities, all right, then the employee may be working with spare capacity, may be idle for a specific period, all right? So if that is the case, I also gave an example that, for example, if the normal working hour within an organization in a day is 8 hours and an employee is currently working for 5 hours, that means the employee is idle for 3 hours. When an employee is idle, that means that employee is not doing anything because there is low volume of activity. There is nothing to be done. So employee is just, doing something that's not related to the job because there is nothing to do. Of course, organization cannot be busy 24, for the entire 8 hours in a day and in a week or throughout the month. There will be a specific period in the month that there will be low volume of activities. So during that period, there will be spare time, there will be idle time. So when a company has idle time, relevant cost is equal to 0. So under spare capacity or idle time or idle capacity, relevant cost is usually 0. Okay, the company will not incur extra cost as a result whenever there is spare capacity. Then we talk about full capacity. We say employee on a monthly salary are usually on full capacity. That is, they are fully engaged. So when an employee is those employees that are fully engaged, they are employee on a monthly salary. So the labor cost paid to those categories of employees that are on full capacity is fixed in nature. Therefore, it's not relevant. All right, it's not relevant. The salary paid to the employees on full capacity is not relevant because every month they are going to earn their salary. So they are not, that fixed cost is irrelevant. However, the only relevant cost that is associated at full capacity is if the company we incur extra cost, okay? We incur extra labor as a result of diverting resources or as a result of employing additional labor to do the job. Then in that case, or there will be need to work overtime. So when that happens, the extra cost that the company will incur as a result of diverting resources or as a result of employing additional labor are relevant under full capacity. Again, I also demonstrated the diagram for you, what you need to do under each of them, where you have idle capacity, then full capacity. Under full capacity, the company can hire more labor. If the company can hire more labor, the relevant cost then represent the extra labor cost the company will incur. If the company cannot hire more labor, then the opportunity cost arising from the diversion of resources, that may result to loss of contribution, or that may involve that the company will incur extra labor costs. Then in that case, all those elements represents what the company will incur under full capacity. So that is where we stopped last time. Of course, we couldn't solve any question because of the time. So today, and then possibly if you cannot finish this topic today, then we may likely have additional illustration next time. If I can do 4 different scenario illustrations, I'll be fine and I'll be good to go. And I can release you that anytime, any day when you see question on that relevant costing, there is nothing to fear. That means you'll be able to tackle it. That is my objective. So today, let's have illustration. Let's start illustration. I just brief you on what we did last time. So yes, I need somebody to read for us illustration. Let's start with illustration number 1. This one has to do with report writing. So let me show you what you need to do. Different scenario is what we are going to consider. Yes, somebody should help us to read this. Who is helping us?
Okay, let me do this.
Okay.
Okay. Ojuelegba. Illustration 1. Ojuelegba Manufacturing Company PLC has approached you for some expert advice on Project X, a one-off order from overseas for which the company intends to tender. The costs associated with this project are as below. Material A, 40,000 naira. Material B, 80,000 naira. Direct labor, 60,000 naira. Supervision, 20,000 naira. Overhead, 120,000 naira. In total, 320,000 naira. You are to ascertain the following. Material A is in stock, and the above was the cost. There is now no other use for the material A other than the above project within the factory, and it will cost 17,500 to dispose of. Material B will have to be ordered at the cost shown above. 2. Direct labor cost of 60,000 relates to workers that will be transferred to this project from another project. Extra labor will need to be recruited to the other project at a cost of 70,000 naira. Supervision cost has been charged to the project on the basis of 33.33 of labor costs and will be carried out by existing staff with their normal duty. 4. Overheads have been charged to this project at a rate of 200% on direct labor. The company is currently operating at a point above break-even point. 5 or 6. The project will need the utilization of machinery that will have no other use of the company after the project has finished. The machinery will have to be purchased at a cost of 100,000 naira and then disposed of for 52,500 at the end of the project. The company tells you that the overseas customer is prepared to pay up to a maximum of 300,000 naira for the project, and the competitor is prepared to accept the order at that price. He also informs you that the minimum that he can charge is 400,000 naira, as the above shows 320,000 naira, and this does not take into consideration the cost of the machine and the profits to be taken on the project. Required. Cost the project for the company, clearly stating how you arrived at your figure and giving reason for the exclusion of other figures. B. Write a report to the company stating whether the organization should tender for the project, stating the reasons why and the price, and bearing in mind that the competitor is prepared to undertake the project for 300,000 naira.
Thank you, Oliver. That is the question. Whenever you are given a question, you have to start from the requirements. Okay, because you start reading from the requirement will prepare your mind on what to expect from the question. In number A requirements, you are to cost the project for the company and state all relevant assumptions. Now, last time I also mentioned to you the exam tips that you need to take into consideration when you are determining relevant cost. One of the exam tips I mentioned to you was that the relevant costing question are usually solved from the additional information. Then number two, I mentioned that the figures given in the table before the additional information are generally irrelevant, okay? And they should be ignored, except there's no other figures other than what you have in the table. Then number three, I mentioned that at all time, you have to state all relevant assumptions. Whether examiner asks you or not, you have to state your assumption. Because as far as relevant costing question is concerned, assumption carries more mark than the assumption carry more marks than the calculation that you have done. So if you now ignore the assumption, that means you are going to lose valuable marks. Okay, please, you have to avoid that. Then number four, I mentioned the disposal value. That examiner may tell you in the question that the material will be disposed of at a cost. It is not a cost. You need to interpret it as a saving, okay? It is a saving and not a cost. So these are some of the tips that I gave you last time under this particular topic. So let's solve this quickly so that we can move to the next one. I'll stop sharing this and then change over to the working notes. Okay. Solution to illustration number one. Ojú ẹlẹ́gba. Manufacturing Company Limited. Number A requirements. Examiner says you should cost the project. Whenever you are asked to cost a project or to determine minimum price, so what the examiner is simply asking you is to calculate relevant costs. So in this case, we are calculating relevant costs for project X. Okay. So remember what I said. Questions under relevant costs are usually solved from the additional information. So let's go back to the question, starting from additional information one. You can see I'm not talking about the figures given in the table that make up 320,000 naira. So you go straight to the additional information. So additional information one, please, you already have the material with you. So just open it, let's follow through together. So material A, you are told that material A is in stock and the above was the cost. The cost of material A you have in the table is 40,000 naira. Examiner told you that that material A is in stock and 40,000 naira is the cost. There is now no other use for material A other than the above projects within the factory, and it will cost 17,500 naira to dispose of. So let's talk about material A. So I will then come here, material. Please, all of you are going to participate. So you have to, let's make the class interactive. So starting from material A. So examiner has told you that we have two figures in this question. Examiner told you that material A is in stock and 40,000 naira is the cost that the company incurred to purchase material A. So that material A, that 40,000 naira, is it relevant to this project X or not? Remember, relevant
Historical cost.
relevant costs are costs that are directly related to a particular course of action or that are attributable to a course of action. So that 40,000 naira, the company has incurred it. That's why they put it in the stock. So I want to know, is it relevant or irrelevant?
It is
Irrelevant.
relevant.
Irrelevant.
Is
If
it
you want to
relevant?
talk, please, if you want to talk, you raise your hand. Don't make it, please, you raise your hand. Just show that you raise, once you raise your hand, then you talk. It is not sufficient to tell me that it's relevant or irrelevant. You have to justify why is it relevant, why is it not relevant, okay? All right, so always mute yourself, but when you want to talk, just raise your hand. Then I will allow you to talk, please. All right. So I'm asking now again, material A, 40,000 naira, relevant or irrelevant? I'm waiting to see your hand. Orelua, yes, go ahead.
It is irrelevant.
Why? Why is it not relevant? Ore,
Used for the material anymore.
pardon?
Sorry. I said the material is in stock and there won't be any use.
Okay, the material is already in stock. Yes, you are correct, because I've already mentioned to you that any material you have in stock, any material that is held in stock is irrelevant because the company has already purchased it previously. Remember, relevant costs must relate to the future. Since you have the material in stock, that means it is not relevant. Even if the company is going to use it for this project, you are not going to account for it. You are not going to charge it as part of the project cost because it's a past cost. It's a past cost, so it's irrelevant. Then you are now told that the material will not be used except for this project, and it will cost the company 17,500 naira to dispose of. That 17,500, how do we treat it? If you know it, raise your hand. Oliver, always mute. Yes,
I'm trying to, I don't know.
Hello, sir.
Yes, go ahead.
That 17,000 would be a savings. So it is relevant.
It's a savings. Yes, you are correct. So the 17,500 naira is a savings. All right. So that saving is a cash inflow. All right. It's not a cost. Examiner has told you that it will be disposed of at a cost. Rather, it is not a cost, it's a saving. Okay. Therefore, I will then come here, material A. Material A, disposal value. Disposal value, which is a saving. 17,500. Because what we are calculating is a cost. The title of what we are calculating is a cost. So this 17,500 must be in brackets. Okay, so this will reduce the total cost, because if you leave it open, if you don't put it in bracket, your cost will be increasing. So you have to put it in bracket to reduce the total cost. All right. Then we also have material B. According to the question, you are told that material B would have to be ordered at a cost shown above. Material B is not in stock, but examiner has told you that it will be ordered at 80,000 naira. So that's what we are going to use. There is no other cost for material B. Here will be 80,000 naira. So the company will spend 80,000 naira to order for material B. So we have treated additional information number one. Now, let me teach you exam technique to solve this kind of a question. So you need to estimate how many pages it will take you to answer the first requirement, so that immediately as you are doing the calculation, you also do your assumption so that you don't forget the assumption that you have made. So you can just estimate half a page. No matter how big is the question, it cannot occupy the entire page. Although there are different scenario questions, but when you assess the question and you think that you must be able to know how many pages or what is the length, what is the extent of your answer booklet that the question can, the solution can occupy. So once that is established, then you need to start immediately with your assumption. So let's say this one cannot be more than, let me see, this cannot be more than half a page. Let's start from here, okay? So assumption. Immediately after the calculation, you have to state your assumptions. I would then say the calculation above is based on the following assumptions. Okay. So I would then say number one, material. Under material, what assumptions have we made? We made assumption of 40,000 and then 17,500. I will then come here. The cost of material A of 40,000 naira is a sunk cost. You have to mention that terminology. You can't just say it's a past cost. You have to mention sunk cost. It's a sunk cost, okay? Or is irrelevant. Is irrelevant to the calculation. That's not sufficient. Then you now mention the reason, because it's a sunk cost. Okay. I would then say, however, the only relevant cash flow associated with material A is the savings of 17,500 naira arising from the disposal of the material. So we are done with that. So I don't need to comment on material B, because for material B, we are told that it's not available and they have to order for it at 80,000 naira, and that's the 80,000 naira that we used. So I don't need to stress myself on material B. If you comment on material B, of course, examiner will not penalize you. So, but there's no need for that. Then, number two, let's go back to additional information. Number two, we are told that direct labor cost of 60,000 naira relate to workers that will be transferred to this project from another project. Extra labor will need to be recruited to the other project at a cost of 70,000 naira. In this additional information number two, we have two different costs. So how do we treat them? So if you know it, please raise your hand. How do we treat it? Yes. Additional information two on direct labor cost. How do we treat it? Yes, Oliver, talk to me.
Yeah, the first one is related to workers that we are transferred from other projects, which means that there's likely to be an opportunity cost.
Okay.
Opportunity cost. Then the second one is that they need to hire labor. So both costs are relevant to this project.
Okay. The 60,000 and the 70,000 naira are relevant. The first one is just like opportunity cost, and opportunity cost is a relevant cost. Okay. Good. So any other person, any divergent opinion to that? How do we treat it? 60,000, 70,000. How do we treat it? Oliver has given us a suggestion and his own position perspective. Yes. Any other person? I need one more person to talk about it. Do you have any divergent opinion to what Oliver just said? Yes. Who again? Who wants to comment on that? All right. Okay. Now, according to the question, you are told that direct labor costs of 60,000 naira relate to the workers that will be transferred to this project from another project. So whether the company executes project X or not, that 60,000 naira will be incurred. Therefore, it's not relevant. The company must pay the workers that 60,000 naira. Provided the cost will not change, then it is irrelevant. All right. Then the second part, you are told that extra labor will need to be recruited to the other project at a cost of 70,000. That additional cost of 70,000 naira is relevant. Let me explain further. The first one, that 60,000, you know, the workers, the workers they are currently working somewhere and they earn 60,000 naira. And I said that whether you execute project X or not, you have to pay them. So the company wants to execute this project X, possibly maybe because they possess the expertise. That is why the company wants to transfer them from their current position to come and execute project X. So the company is just moving them from their current position to come and execute project X. The company is not paying additional money. That is why they are still going to earn that 60,000 naira. They are earning that 60,000 naira not because of project X, because that is what the company currently paid to them. However, the project they are currently working on, where they earn the 60,000 naira, there will be vacuum on that project. There will be nobody on that project. That is why the company wants to recruit additional labor that will go and replace them in that place so that they can focus on project X. So as a result of the company recruiting additional labor, then the company will incur 70,000 naira. So that's, if not because of project X, the company would not have incurred that 70,000 naira, and that is why the 70,000 naira is relevant. So I would then go up there. I would say labor, extra labor cost, 70,000 naira. Then let's go and state our assumption. Labor. Okay. The labor cost, the direct labor cost, the direct labor cost of 60,000 naira is irrelevant because irrespective of the decision taken on project X, the company will pay, or the workers will be paid. The workers will be paid. Okay, that's that. However, the additional costs, the extra costs, the extra labor costs, the extra labor costs of 70,000 naira is relevant and has been included has been included as part of the project cost. Okay, that's that. Let's move on. Number 3. Supervision cost has been charged to the project on the basis of 33 1/3% of labor costs and will be carried out by assisting staff with their normal duties. So, how do we treat the supervision cost? How do we treat the supervision cost? According to the table given to us, from the table given to us, supervision cost is 20,000 naira. And we are told that that 20,000 naira is gotten by taking 1/3 of 60,000. 60,000 divided by 3 will give us 20,000. That's how they arrive at the 20,000. So they're now asking you, they're now telling you that the supervision will be carried out by the assisting staff with their normal duty. So that 20,000 naira, I'm now asking you, is it relevant or irrelevant? Oliver, talk to us.
Yeah, in my view, I think it is not relevant. Not
Why?
relevant in the sense that these supervisors are salary-based labor. So
Okay.
whether the project exists or not, they still have to pay them their normal salary.
Good. You are correct. You are correct. So, irrespective of the decision taken on this project X, the supervision cost will be paid. Therefore, provided it's not going to change, then it is irrelevant. So, we are not going to account for that. So, number 3, supervision. Okay. The supervision cost of 20,000 naira is irrelevant because it will be paid irrespective of whether
Hello, sir. So sorry.
yes.
I'm so sorry. My network had issue. This point of number 3, just in case I just missed out of it. I need to.
What
Thank
are you
you.
saying?
I'm saying that I couldn't get anything about the 3rd point because of my network. So please, if you can just, I really appreciate it. Thank you.
On 3rd point, on supervision.
Yes,
Are
sir.
you
Very well, sir. Yes, sir. Yes, sir.
okay? That's what I'm writing on the board now, on the screen now. The supervision cost of 20,000 naira is irrelevant because it will be paid irrespective of whether or not project X, irrespective of whether or not project X is executed. Okay, so examiner has told you that the supervision cost will be carried out by the the supervision will be carried out by the assisting staff with their normal duty. Even apart from that information, supervision cost is a fixed cost because on a monthly basis, you have to pay the supervisor. So provided your supervision cost will not increase, will not change, it is irrelevant. All right? So just ignore it. It's not relevant. The only time you can consider supervision cost is if you are told that as a result of the project, additional costs will be incurred on supervision. That additional cost, you have to consider that. But other than that, it is always irrelevant because it's a fixed cost. You pay the supervisors on a monthly basis. So it's not going to change anything. All right? Grace.
Yes, sir.
So
Thank
So
you.
number 4, let's go back to the question. Number 4, we are told that overheads have been charged to the project at the rate of 200% on direct labor. When you look at the table given to you, overhead is 120,000 naira. So examiner is now telling you that They arrive at that overhead by taking 200% of direct labor. Direct labor is 60,000. 200% of 60,000 is 120,000 naira. So I'm now asking you, that overhead of 120,000 naira, is it relevant or irrelevant? Yes, relevant or irrelevant?
Hello, sir.
Yes.
Any overhead is irrelevant, except where it's a step or whatever cost.
Overhead is irrelevant. Okay. Why is it not relevant?
Because it is a fixed cost already.
It's a fixed cost. Okay. Any divergent opinion on that? Any
Hello,
divergent
sir.
opinion? Yes, Grace, talk to me.
Okay, sir. If I may understand this statement, overheads have been charged to the project. So, and since it's a cost that has already been charged, is a sunk cost, so it's irrelevant to me.
Okay, it is not relevant. Okay, it is true that the overhead cost is irrelevant. Okay, I will come here, overheads. Now, let me explain further. You know, when we did operating statements under absorption costing method, I mentioned to you that I explained overhead absorption costing, and I said that overheads absorption costing represent the process of allocating indirect costs, including rents, electricity, utility, depreciation, rate, lighting, all those indirect costs that will be incurred in the factory. So the process of allocating it to a product or service is what is known as overhead costing. Now, when you talk about overheads, there are two types of overheads. We have variable overheads. We also have fixed overhead. Only the variable overhead is relevant. The fixed overhead is irrelevant. So in this question, examiner just gave us overheads. We don't know whether it is variable or fixed. So where you have this kind of a situation, it is assumed that the overhead is a general overhead. Okay, so it is assumed that this 120,000 area is a general overhead, which is irrelevant. All right, which is irrelevant. Just ignore it. But if in the question examiner separate it into variable and fixed, then you only account for the one that is variable. The one that is fixed is irrelevant. You ignore it. I believe that is clear. So let me put it down. The overheads of 20,000 naira, the overheads cost of 120,000 naira is assumed to be general overhead since it is not separated between variable and fixed. Okay, therefore it is not relevant to the calculation. It is not relevant to the calculation. All right, so let's move on to the next one. Number 5, the company is currently operating at the point above break-even points. That one has nothing to do with our calculation. When you talk about break-even point is a point of no gain, no loss, where total revenue equates to total cost. So if a company is currently operating at a point above break-even point, it means that the company is profitable, because at any point above break-even point, there will be profits. At any point below break-even point, there will be loss. So the interpretation of this note number 5 is that since the company is currently operating at a point above break-even point, it means that the company is profitable, and therefore any project they are going to undertake, any activity that they are going to consider must be an activity that will produce additional profits to the business. So that is just the interpretation of that note number 5. It has nothing to do with our calculation. However, when we are writing our report, we can just mention it. Okay? So let's move to the next one. Number 6. The project will need the utilization of machinery that will have no other use of the company after the project has finished. The machinery will have to be purchased at a cost of 100,000 naira and then disposed of for 52,500 at the end of the project. So how do we treat that information? Yes, how do we treat that information? Who is raising hand? Yes, Oliver, talk to me.
Okay, yeah. As the question stated, there will be need for us because of that project, we have to acquire a new machinery, which will
Okay.
cost us. So there's a cash flow and it is relevant. Now, one other thing is that that machine has no other use except for that project, and it is not available. So we have to purchase it, which shows how relevant it is. Another thing also is that we are told that it has a disposal value of 52,500, which implies that if we acquire the assets at 100,000 naira, and after the project, we can also dispose it. So what we have to take into consideration is the difference, what they call the um, forgotten the word now. But we have to take the difference, which is around 500,000 naira would be the relevant cost to be included in our calculation.
All right, so you are correct, Oliver. So you are correct. The 100,000 naira is relevant. The 52,000 naira 500 is also is part of the cash flow that you have to consider. So the difference is what you are going to include as part of the cost of the project, because you need 100,000 naira to purchase that machinery. You are not the company wouldn't have purchased the machinery if not because of this project X. Therefore, the 100,000 naira will be incurred on the project. However, at the completion of the project, the machinery will be disposed at 52,500 cash inflow savings. Therefore, 100,000 minus 52,500, which is 47,500. It means that the actual cost incurred on machinery on this project is 47,500. So let's go there. Machinery. Okay, under the machinery, we have purchase price of 100,000. We have disposal value of 52,500. The difference of 47,500 will be part of the project cost. So let's go and state our assumption. Note 5. Machinery. Okay. I would then say the only relevant cost associated with the machine utilization is 47,500 naira, representing the difference between the purchase price of 100,000 naira and the disposal value of 52,500 naira. So that's that. So I think that one is self-explanatory. Oliver, you are still raising hand.
Sir,
Oliver,
sir,
you are still raising hand. Okay. Yes, Ablatif.
sir, I'm sorry to say this, sir.
Yep.
What if I have to present my own notes by saying that both the cost and the savings are relevant? However, the savings will be used to reduce the cost.
You are still saying the same thing.
Okay.
However, it's not compulsory. One thing about assumption is that it's not compulsory that you have to put it the way I put it. We are different different people with different exposure and the background. The way we articulate points differ. All right. So the way it's not expected that you are going to do the way I'm doing it. Based the way it comes. If I want to do this thing tomorrow now, I can't say it the same way I'm saying it now. The way it occurs to me is the way I'm going to put it down. So you as an individual, as a student, the way you can interpret the question is what you should do. Just make sure that you are speaking the right thing. All right. So what you just said is correct, but in a different form, which is the way you think it should be. All right. So we are still saying the same thing. Okay, Ablatif.
I'm fine, sir. Thank you.
All right. So let's move on to the next one. I think that's the last note. Yes, we also have an additional, next paragraph. We are told that the company tells you that the overseas customer is prepared to pay up to a maximum of 300,000 naira for the project, and a competitor is prepared to accept the order at that price. He also informs you the minimum that he can charge is 400,000 naira, as the above shows 320,000 naira, and this does not take into consideration the cost of the machine and the profits to be taken on the project. So this one has nothing to do with the calculation, but you can reference it when you want to prepare your report. What this paragraph is saying is that, okay, the customer is willing to pay maximum of 300,000 naira, but the company is doubting that contract price because they believe that this contract price of 300,000 naira is below their estimated cost of 320,000 naira. Even the estimated cost of 320,000 naira is not including the cost of the machinery of 100,000 naira. However, what the company is saying is that the minimum they can accept is 400,000 naira, and that the company's rival competitor is willing and prepared to accept the 300,000 naira from the customer. So, and that's why they have approached you as an expert, as a management accountant, to help the management to make informed decisions so that they don't lose future opportunity as a result of exorbitant price. Okay? So that is the question. Let's complete our calculation so that we can do our report. So there's nothing again to calculate. Let's add up all the numbers. So add up all the numbers. What do you have there?
One 197,500.
197,500
No.
minus 17,500.
Yeah. 180.
That's 180,000.
Okay.
So the total relevant cost is 180,000 naira. So that is number A part of the question. We've already stated our assumptions. So let's go to number B. So far, so good. Ask me any question under this number A before we move to B. Do you have any concern on our calculation? Yes, Alexa, talk to me.
This the one we are doing, sir. How many marks
Yes.
this one?
This particular one, this number A requirements, the total marks of this question is 15 marks. This number A's requirements.
Okay.
So it's 15 marks. A and B, the total marks for the question is 15 marks. However, for this number A, is 10 marks. All right. So if you do only the calculation, you cannot earn your full mark. The calculation may be just 3 marks. The assumption is 7 marks because at all times, assumption is always the mark, the scores or the marks given to or awarded to the assumption is always higher than the calculation. And that is why I'm always encouraging you that whenever you have question under relevant cost, always state your assumption. Always state your assumption. And the assumption is not something you are going to fabricate. It's already in the question. Just interpret it the way you understand, the way you have treated the each additional information. That's what the examiner is asking you. Okay. So let's move to number B now. Number B, report writing. So number B, report. Now, when you look at the first paragraph of the question, the examiner told you that Oju Elegba Manufacturing Company PLC has approached you for some expert advice on Project X, a one-off order from overseas for which the company intends to tender. So you are an expert. Who is the expert? Yes, who is the expert?
Management accountant, sir.
Management accountant, you are correct. So now, when you want to write your report, you must be sure the kind of report that you want to write. Is it a letter kind of report or a memo kind of report? You need to establish who is writing the report. Who are you writing the report to? All right. This report will be written by the management accountant. Is it a management? Is it a management? Is it a consultant? Is it an external consultant? Is the management accountant an external consultant or a professional accountant in business embedded in the business? Is it a professional accountant embedded in the business? So you need to establish, because when you look at the paragraph introduction part of this question, examiner did not tell you that this expert is an employee of Oju Elegba Manufacturing Company PLC. You're also not told that he's an external consultant. So you need to make a position. If you think that this expert is an employee of Oju Elegba, because a management accountant is an expert. You are the one that is just calling the manager is an expert, because what he can do, what the management accountant can do, no other person can do it. The way a cost engineer will cost a project is different from the way a management accountant will look at it. All right. Therefore, so you need to take a position whether this expert is an employee of the company or an external consultant. Because if he's an employee of the company, then you are supposed to write a memo. But if you think that he's an external consultant, you are going to write a letter. And each of them, there are different ways of constructing them, of constructing it. So our assumption here is that this expert is a management accountant embedded in the business, is an employee of the company. All right. So the management has approached you to provide some expert advice on the Project X. So how do you write your report? So when you want to write a memo kind of report, how do you do it? Okay, how do you write your report? Now, you need to establish from the beginning. Do you want to use slant format or you want to use block format for your report? When you want to use a block format, it means that everything you are going to write must be on a straight line on the left. Everything must be on a straight line. And whenever you want to give a paragraph, just leave a space, leave a line, move to the next one to give a paragraph. However, when you want to give a slant, you all understand how to write a report. So, but in any case, to solve this particular question, I would then say, of course, I will come in and say, who is writing the report? To whom are you writing the report? Okay, so you can say from management accountant to management. Okay. Then, of course, your memo must have a subject. So then say subject. Now, whatever you put as subject is what examiner will mark for you. Subject can be anything. Whatever you think it is the subject is what examiner will mark for you. A student can put project X. Another student can put analysis of project X. Another student can say acceptance of project X. Another one can say evaluation of project X. Whatever you put as subject, it was what the examiner will mark for you. There is no standard for naming or putting a subject, all right? But what is important is that your memo must have a subject, because if you leave it blank, if you don't put subject, of course, that your mark will be deducted. You can't earn your full mark as a result of that. So I can say evaluation of project X. Then also your memo must have a date. So come here, date. You can write any date. So I can say January 20th, January 20, 2024. That's the date. Then you now begin. Now, when you want to begin, there's no need for salutation. All those dear sir, dear ma, it's not necessary in internal memo. You have to ignore it. You don't do that. It's only when you are writing a letter that you can say, dear sir, dear ma. Then, of course, the address of the sender and the receiver, everything will be there. But in this case, there's no need for you to put address, because the company documents, the letterhead that you are using to write the memo will already show the address. So it is internal. There's no point for you to be putting address. All right. So the only thing I can do here is I can just say re-evaluation of project X. Remember, from the first paragraph of the question, you are told that Ojuelegba Manufacturing Companies PLC has approached you for some expert advice. That means there is a proud discussion. So you are now referencing, when you say you are referencing the initial discussion on that particular subject. All right. So we are referencing it. So re-evaluation of project X. Then I'll now begin. There's no need for you to say, dear sir, dear ma'am, just ignore that. So I will just come here, refer to our last discussion. Again, it's not compulsory that you must write it the way I want to write it, because some people are very good in report writing. However, whenever you are writing your report, make it very brief and complete. All the ingredients that needs to be there must be there in the report. But don't write too much grammar. Don't write too much. Don't make it too wordy, because management does not have the time to be wasting on reading too much or too voluminous reports. They don't have that kind of a time. In bullet points, straight to the point, and then make it very complete. All right, that is what is needed in your report writing. Because if it's too wordy, management will lose interest. They don't have that time. Okay, so refer to our last discussion on project X. On project X, a one-off order from overseas customer. Okay, I would then say the project, the economic, I will say the economic, the financial, and economic viability of the project has been evaluated. That's the introduction. I will now give a paragraph. Because I'm using a block format, I will now give a paragraph. Okay? I will give a paragraph. I can underline this. So I will now give a paragraph. Because I'm using a block format, when I want to give a paragraph, I will just leave a space. I will leave a line, move to the next one. So I will then say the project has been evaluated, or the project was evaluated using, the project has been evaluated. Okay, let me see if I can combine it. The financial and economic viability of the project has been evaluated. Let me continue with that paragraph. So that's using relevant costs for decision making. Okay, using relevant costs for decision making. That's that. Now, you are talking to the management. Management does not know what is relevant cost for decision making. So you need to explain what you mean by relevant cost for decision making. I would then say, for this purpose, relevant costs are costs that are directly attributable to a particular course of action in making managerial decision. Okay, so there are costs. I can then go further. There are costs that will be incurred as a result of undertaking Project X. Okay, that is for that. I've explained what relevant cost is all about. The next thing I will do is to advise on what the company should do. I can say consistent with the calculation in A above, consistent with the calculation in A above, the total relevant cost that will be incurred on Project X is 180,000 naira. Therefore, the customer order should be accepted. Therefore, the customer order should be accepted. I can then go further. This, I can say the acceptance of the projects, or the acceptance of the offering price of 300,000 naira. Okay, of 300,000 naira will enable us. Don't say we enable the company, because you are a member of the company, you are an employee of the company. Don't say we enable the company. So you have to personalize it. You write your report as if you are part of the business, which of course that's what you are, because you are an employee. So you say that the the acceptance of the offering price of 300,000 naira will enable us to earn additional profits. Sorry, let me write that. Additional profit. What's wrong with you? It's too sensitive. Additional profits of 120,000 naira. That is 300,000 minus total relevant cost of 180,000. Considering the fact that we are currently operating above break-even point. Okay, we've already said that the company will earn additional profit of 120,000. And then according to the question, we are told that the company is currently operating above break-even point, which means the company is profitable. Here we are going to achieve additional profit of 120,000. Therefore, the project should be accepted. All right, the project should be accepted. Then if you like, we can go further. You can say our major competitor, we can say if we do not undertake the project, our major competitor, okay, our major competitor is willing to accept, is willing and ready to accept the offer. And this means that we will lose. This means that our company will lose future opportunity arising from the customer, or that may come from the overseas customer. Future opportunity that may come from the overseas customer. So all the information we have in the question, we have embedded it in our report. So finally, in conclusion, you can then say, we've already advised that the company should accept the offering price. They should accept the contracts at the offering price of 300,000 naira, because we are going to earn additional profit of 120, which is consistent with our objective, or with our policy of being a profitable organization, because we are currently operating at a point above break-even point. Not only that, if the company fails to undertake the project, the company's major competitor will take up the project, and then, of course, this will mean that the company will lose future opportunity that may arise from the overseas customers. Okay, that is that. Then conclusion. So you can say, should you need further clarification clarification or explanation, further clarification, do not hesitate. Okay, so contact me. Do not hesitate to contact me. That's it. That's it. All of these things, it can't take you more than 1 page. You are good to go. You can even summarize it. All this one, I'm even writing too much of words, but again, all the relevant points must be there. All relevant points must be there. Okay, so that is that. Then, not only that, there's no need for you to say, yours truly, yours sincerely, yours faithfully, your friend, your son, yours colleague. You don't need to do all of that. Just mention your name and mention your name, your designation, title. That's all. Move on from there. Okay, um, you can say, Ana Sodo, Ana Sodo. Okay, Ana Sodo. Bamidele. I want to do Wasobia. Bamidele. Then Bamidele Abdullah. Abdullah. So that's Wazobia. So that's ABA, Wazobia. Then you can put your title, ACA, all the title that you have, because once you put ACA, you are an expert. That indicates that you are an expert. Any other title that you have, you can, any other designation like ACA, BRT, PDP, APC, LP, whatever the designation that you have as a title, just put it there. All right. So to demonstrate that, of course, you are an expert. Then you can just say management accountant. So on the day of your exam, there is no need for you to sign it, okay? Management accountant, okay? So there is no need for you to sign it. But in practice, you can sign memo report. You can sign memo report. Depends on who you are writing the report, whom you are writing the report to. At times, it is possible for a multinational company, for example, company that has operation in different countries. Say for example, the head office or the headquarter is in Germany or UK or America or South Africa, and the subsidiary is here in Nigeria. So if this project is being undertaken in Nigeria and you want to write a report to the management, to the upper management, of course, you are going to indicate the name of the preparer of the report. Who prepared the report? That's the preparer. So the preparer's name will be there, then the preparer must sign it. Not only that, because it is coming from the subsidiary, the local, it's coming from the local, from the subsidiary and the report is going to the head office. So there must be somebody within the system that will review the correctness and the validity of the information in the report. So there will be review. It can be more than one reviewer. All right. It is possible the management accountant may review with the manager in the department. It is also possible that you may want to give the report to another department's manager to review. So there will be different levels of reviewers. So whoever that has reviewed the report, you also need to indicate their name and their signatures. Not only that, the local management, the head, the chairman or the president or the MD in the local, in the subsidiary, in the local country, we also need to endorse the report. Okay, we also need to endorse the report. So the name of the person that endorsed it with the signature, everything will be there. So if the final approval of the report resides with the head office, then of course that head office is where they are going to get the final approval before the project will commence. What is important is that all the participants in the local country, all of them that have participated in that report, they have to sign, because your signature will give credence, will give validity to the report that you have written. Because if you just write the report, you put the name, you never put, there is no signature. Anybody can just use PowerPoint to write the name of anybody. So once you put the signature, that confirms that that report is authentic. It has been reviewed, so that the head office management can rely on that report. Other than that, it will not hold water if there is no signature in it. All right. In practice, that is how it works. Okay. So that is that. Let me know if you have any question for me so that we can move to another illustration. We are done with this particular question. Yes,
sir.
who's talking? Grace. Yeah.
I understand almost everything, but I just have two questions to ask you.
Okay.
Please come down. Please scroll down. One is about the memo from the beginning of the memo. So from the beginning of the memo. Thank you. So from the question, it said management accountant. So I just want to understand, how shall I understand that is the organization's accountant that is involved?
I've already explained this when we started. That's the starting point. I mentioned to you that you have to establish from the beginning who is writing the report, who are you writing the report to. And I mentioned to you that because if once you establish from the beginning who is writing the report, then that will tell you whether you want to write a letter or you want to write internal memo. That's where I started from. Maybe you are not there, or maybe you are not paying attention. So I mentioned it that if you assume, because according to this question, the examiner did not tell you whether it is an external consultant or an employee of the company that is an expert. Of course, one thing that is clear is that it is only management accountants that has the requisite knowledge to advise management in this circumstance. Therefore, you need to establish this management accountant. Is it an external consultant or a professional accountant embedded in the business? So our assumption is that it is an employee of the company. So that means it's an expert within the business. And that is why we are writing a memo. And I also mentioned that if you assume that it's an external consultant, in that case, you are going to write a letter to the management of Ojuelegba Manufacturing Company PLC, not a memo, because internal memo is within the organization, is a way of communication within the organization. If it is outside the organization, it has to be a letter. That is how I started from. But is it clear now, Grace?
Yes, very well, sir. Very clear, sir. And
So
the
what's the second one?
the evaluation, the V.
Yes.
So I don't really understand where the V, because re is like it's something that is brought back the second time, right? Like an issue that is
Yes,
attended to.
now I mentioned that.
So
I said when
question. Okay.
I said when you put re simply means you are referencing the proud discussion that has taken place. Say, for example, I've met with you, Grace. We have discussed. I want you to do something for me. I've given you an idea. I've given you a heads up on what I want to do. I want you to do for me. So you are now writing the report to me that, okay, based on our discussion, based on what you hinted me that you wanted me to do, that is why we are saying that is, we are referencing evaluation of Project X. When you look at the first paragraph of the question, in the question, the examiner told you that Ojuelegba Manufacturing PLC has approached you for some expert advice. That means there's a proud discussion, isn't it? So that's why you put that re. Re simply means you are referencing it. You are referencing or you are referring to the discussion you have had previously. Okay?
Yes, sir. Very well. Thank you very much, sir. And I pray that another question that we'll attend to will make us that it will be an external accountant that will attend, so that we'll know how the whole
It's okay. There's no report in the remaining questions we have. This is the only one that has a report. All right. But in any case, of course, you may likely have other reports. There are report writing can come in any form. It can come under financial reporting. It can come under corporate strategy management and ethics. It can come under public sector accounting and finance. What is important is that you must know how to write a report. All right. There are just two, whether it is internal or external report, whether it is letter or internal memo. So you must know what to do, the content of each of them. All right. So Oliver, you raise hand. Talk to me.
It's just something perhaps I've said. You were saying that we should personalize the report
Yeah.
when you
Yes.
said it will enable us N.
Yeah.
Um, um, I think I did something, a kind of program, and there we were told that our duty as an accountant is just to prepare those figures and let the management decide. That if we decide for them or we kind of align them
Yeah.
to their decision, if
You are
anything
not,
goes
you
wrong,
are not,
we
you are not, you are not deciding for management. You are not deciding. The final decision rests with the management.
with the management.
What you
Okay.
are saying, what I'm trying to say here is that you have to personalize it.
Oh,
When
okay.
you are working for a company, you don't want you attached to the company, you have to be part of the business. You need to be recognized as an employee of that business. So when you are referring to that business, you have to say, oh, our company, our business. Okay. So
Okay.
you can't differentiate yourself from, you can't just take yourself away out of the business. You have to be part of. That's what I say. You should personalize it. That doesn't mean you are making a decision for management. What you are doing is just making a recommendation. You are advising the management on
Okay.
what to do. All right.
Okay.
So here
Okay.
you are only advising the manager. That's why we said that consistent with the calculation in A above, blah blah blah, the company order should be accepted. You are not saying the company must do it. You are saying it should be. I didn't even put B. Thank God. That's why my mind even go there. So it should be accepted. Okay. So you are not forcing the management to do. You are making recommendation. All right, you are advising the management on what you, as an expert, because they are relying on what on your, the management is relying on your input because you are an expert. So you are only making recommendation, not decision. You are not the one to make a decision. All right. So the
All right.
management will, you've already advised now that, okay, oh, if they accept this project, the company will earn additional profit of 120. So it is now left for the business to undertake to accept your proposal or your recommendation or your suggestion. Okay, the company can decide to say they can insist that they want to charge that 400,000. And if the company decide to charge 400,000, then of course the company will lose that business opportunity because the customer will go to the competitor that is willing to accept the 300,000 naira, which means that future opportunity will not come to the business. And if if anything, if there is a big opportunity that comes in the future, the company will lose it. And if the company is aware of that, of course, you have exonerated yourself as management account because the letter will be there. You advise the management on what they should do, but they do or they did otherwise. So you are not at fault. Okay? Yeah. Okay, then. You're welcome. So let's have another illustration. Let's have another illustration. I will stop sharing this and move to the working notes. Okay. The turnout is low today. What's happening? Is it that your colleagues have a function somewhere else or they are watching football? Anyways, let's move on. They will listen to the recordings. So let's have another illustration. So you can see in this illustration number 2 now, where examiner have painted a scenario, okay, almost half a page scenario. You're now asked to explain incremental cost, differential cost, avoidable, unavoidable, committed, sunk cost, and the opportunity cost. 12 marks, 12 bonus marks, 2 marks for each of them. So it is not sufficient for you to just define incremental cost. You have to give it an example, okay? So you have to give an example. In any case, I won't solve this illustration number 2. Maybe I will give it to you as an assignment, but let me see the one that is more technical. I can't solve more than 4 illustrations under this topic. Let me see. Yes, let's solve illustration number 2. So illustration number 3, Tumpolo. I need somebody to read for us, please. Yes?
From
Who will
Polo
help?
Nigeria,
Thank you.
Tom Polo Nigeria Limited is an engineering company that specializes in building engines for grinding machines. One of the components of the for building these engines is sourced from ICAN Nigeria Limited, a company in the same group with Tompolo Nigeria Limited. Each component is being transferred to Tompolo, taking account of ICAN's opportunity cost of the components. The variable cost of ICAN is 280 naira per component. A prospective customer has approached Tompolo to submit a quotation for a contract to build a new engine. This is a new customer to Tompolo, but directors of Tompolo are keen on winning this contract as they believe that this may lead to more contracts in the future. As a result of this, they intend pricing the contract using relevant costs. The following cost data is given in respect of the contract. 1. The production director of Tompolo is on an annual salary equivalent to 15,000 naira per 8-hour day. The materials needed for the contract are 110 square meters of material A. This material is normally being used by Tompolo and it has 200 square meters in stock. These were bought at a cost of 120 naira per square meters. They have resale value of 105 naira per square meter and replacement cost is 125 naira per square meter. 30 liters of material B. This material has to be purchased specifically for this contract, and the minimum order quantity from the supplier is 40 liters at a cost of 90 naira per liter. Tompolo has no use for this material after the contract is executed. 60 components will be purchased from ICAN at a purchase price of 500 naira per component. 3. A total of 240 direct labor hours will be required. The current wage rate for the grade of labor that will work on the contract is 110 naira per hour. Tompolo currently has 75 direct labor hours of spare capacity for this grade and are being paid under collective wages agreement. The additional hours required will be sourced by either 1. Overtime at a cost of 140 naira per hour, or employment of temporary staff at a cost of 120 naira per hour. But these temporary staff, because they are not experienced, will require 10-hour supervision by existing supervisor, who would be paid overtime at a rate of 180 naira per hour for this contract. 4. 25 machine hours will be required. The machine to be used is already leased at a weekly lease rental of 6,000 naira. It has 40 hours per week capacity. The machine has sufficient available capacity to complete the contract.
Yes.
I think she's
Uche.
offline there. She's offline.
Oh,
So I
okay.
continue from there. Yeah.
Yeah.
So I think the fourth one, 25 machine hours will be required. The machine to be used is already leased at a weekly leased rentals of 6,000 naira. It has 40 hours per week capacity. The machine has sufficient available capacity to complete the contract. The variable cost of running the machine is 17 naira per hour. The company's fixed overhead absorption rate is 200 naira per direct labor hour. You are required to 1. Calculate the relevant cost of building this new machine and explain why you have included or excluded any cost in your calculations. 2. Discuss the factors that will be considered by ICAN to determine the opportunity cost of the component.
Thank you. Grace and then Oliver. Yes, that is the question from the requirement number A. You are to calculate relevant cost. This question is very explicit, what you need to do. Examiner wants you to calculate relevant cost of building the new engine and explain and state your assumption. Examiner says you should explain where you have included or excluded any cost in your calculation. That is, simply state your assumption, 15 marks. All right. So that is for that. Quickly, let's go there. Let me stop sharing this and move to the working note.
I'm so sorry, class. My network failed me.
Yes, we understand. Network will be erratic sometimes. Okay, solution. Solution to illustration 3. This is too sensitive. Illustration 3. The name of the company is Tompolo. Is it a PSC or Tompolo Nigeria Limited? Okay. Number A, requirements. You have to determine relevant cost. I would then say calculating relevant cost. So I can stop there, or you can say calculate relevant cost for building the new engine, or just say calculate relevant cost. Stop there. Okay. Remember, relevant cost questions are generally solved through the additional information. So let's go back to the question, bullet point by bullet point. Okay. Starting from the first paragraph. In that first paragraph, I don't have anything to do there. I've told you, relevant cost questions are solved from the additional information. So in the first paragraph, there is nothing that will impact our calculation there. All those, the variable cost of ICAN is 280 per component. That one is not related to what I want to do. So just ignore it. The prospective customer as a product one has nothing to do with the calculation, it's just story. Then we start from the following cost data is given in respect of the contract. Number 1, the production director of Tompolo is on annual salary equivalent to 15,000 naira per hour per 8-hour day. Okay, so that 15,000 naira annual salary equivalent to 15,000 per 8-hour day, is it relevant or irrelevant?
Irrelevant.
Why is it not relevant?
Either the project is taken or not, the salary will be paid. It's a
You are
fixed cost.
correct. The production director salary will be paid irrespective of the decision taken. So let's go and state our assumption. So this page, let me see. Yes, that will occupy the. So let's state our assumption here. So I will say assumption. The calculation above is based on the following underlying assumptions. Okay. Number 1, Roman figure 1. Production director salary. So we have said it is not relevant. You can say the production or the salary paid to production director. Let's reframe it. The salaries of 15,000 naira per 8-day week. Let me confirm it. Is this, yes, 8-hour day per 8-hour day per 8-hour day is irrelevant because the salary of 15,000 naira per 8-hour day paid to, I did not complete that statement, paid to the production director is irrelevant to the calculation because the director will be paid irrespective of the decision taken. Okay? Whether you build this engine or not, you must pay the production director. So that's not relevant. Let's move to the second point. Number 2, the materials needed for the contract are bullet points. The first bullet point, 110 square meters of material A. So we need 110 square meters of material A to build the engine. This material is normally being used by Tompolo and it has 200 square meters in stock. These were bought at a cost of 120 naira per square meter. They have resale value of 105 per square meter and replacement cost is 125 naira per square meter. So how do we treat that information? If you know it, raise your hand. How do we treat it? Yes, Ablatif.
We'll take the replacement cost because that is a future cost.
Okay. What about the 120 naira?
120 is incurred already.
Okay.
That
What
is the
about the
cost
105? The resale value?
105, the resale value. The question did not say some of it will remain it will be resale.
Okay. So you are correct. Now, according to the question, we need 110 square meters of material A. You are told that this material is normally being used by Tompolo and it has 200 square meters in stock. Okay? And this 200 square meter was bought at 120 naira per square meter. So that 200 square meter that was bought at 120, that 120 naira is irrelevant because it's an historical cost. It's a sunk cost, so you ignore it. However, you are now told that the material has a resale value of 105 per square meter. Examiner only mentioned to you that there is a resale value of 105. You are not told that the material should be disposed of. So there is no need for you to consider. Remember, in my explanation of the concept, I mentioned that disposal value should be considered if it can be ascertained that the material is no longer needed and will be disposed of. So in this question, the examiner did not tell us that the material will be disposed of. Therefore, that disposal value of 105 is irrelevant. However, and I've also mentioned, once you are given replacement cost or current purchase price, it means that you are going to replace that material, you are going to buy the material. So without wasting more time on this, all we need to do is to say 110 square meter that is needed for material A multiplied by replacement cost of 125 naira per square meter. So material A. How many materials do we even have there? We also have material B. So I can say material. Under material, we have material A. In this material A, there is a replacement cost of 125 naira And we need material of 110 square meter. Give it to me. 125 multiplied by 110. What do you have there? Yes. What do you have?
13,750.
Thank you. 13,750. That's the cost that the company will incur on material A. Move on to the question. Let's go and state our assumption on that. So, assumption, high. Material, okay? I would then say the historical cost of material A of 120 naira per square meter is a sunk cost and therefore irrelevant. Okay. However, according to the question, we are told that we are given a replacement cost. So I would then say we can say only the replacement cost, only the replacement cost of 125 naira for the 110 square meter of the material is included in the calculation. Okay, we are still on that paragraph. In addition, the resale value of 105 naira per square meter is not relevant since it is not cleared. Since it is not cleared, since it is not clear that the material or since there is no indication, let me write it, since there is no indication that the material will be disposed of. So that's that. So we are done with material. Let's move to the next one. So far in that number 2, any clarification? Do you any comments so that we can move to the next one? If it is not clear, so that I can explain. Okay, let's assume that you are fine. So let's move to the second bullet point. We are now told that 30 liters of material B. This material has to be purchased specially for the contract, and the minimum order quantity from the supplier is 40 liters at a cost of 90 naira per liter. Tompolo has no use for this material after the contract is executed. So, how do we treat material B? We are told that 30 liters of material B will be needed, and then only 40, the minimum that supplier can give for material B is 40 liters at a cost of 90 naira per liter. So how do we treat that information? Yes. Yes, Oliver.
Yeah, the cost for material B is relevant since it is specifically needed for this project. However, since we cannot get what we want because there's a kind of limit to what the supplier can get, which is 40 liters. So we have to pay for the 40 liters and use the 30, then keep the 10. So it is relevant. We have to buy for 40. Yeah.
Yes, you are correct. So let's move on. So talk about material B now. Under material B, only 40 meters at 19 naira. Let's say 19 naira multiplied by 40 meters. Even though the company needs only 30 liters, but because supplier is only willing to sell 40 meters, the minimum that they can sell is 40. So the company will surely pay for the 40. The extra 10 that is not needed, if the company sees any customer that wants to buy, then they can sell it. But in this question, we are not told that the excess will be disposed. So just ignore. All right. So 90 multiplied by 40 liters. What do we have there?
3,600.
3,600. Here is 3,600. Okay. Alexa. Okay. Ablative, yes.
Okay, sir. I want to assume, sir. I don't know if I will be correct, that since we need 30 and the minimum they can sell for us is 40, there will be 10 unused. What if that 10 were to be a perishable, whatever that will not last longer, and in some days it will damage? That would be a loss. So what do we equally factor that? Or just ignore that?
We are less concerned with that. Examiner did not tell us whether it is perishable or a durable product. So we are less concerned with that. What the question is saying is that the material, the minimum that we can get from supplier is 40. Even with it's not, with a durable product, in as much as you are not told what to do with the balance, just ignore, we are less concerned with that. Just go ahead, calculate the minimum of 40, multiply with 19 naira. That's all. All right. But if you are told otherwise, what to do with the balance or with the excess, then it's a different ball game. But as far as the question is concerned, we are not told otherwise. Just ignore. Yes, Alexa, talk to me.
So is it not
Yeah.
a tricky question, because what we are calculating here is a relevant cost, whereas we only need only 30 liters. So why not we take the 30 liters times 90 as a computation? That's what we recorded to the relevant costs. Doesn't mean that we bought it for 3,600 because of the MOQ there, but in our calculation of relevant cost is only 30 is required. I don't know, sir.
Yeah, yes, the contract required 30 liters of material B. That is what you need to execute the contract. However, the supplier is only willing to sell 40 liters for you. You cannot get 30 liters from the supplier. The minimum that supplier will give to you is 40 liters. So that means you are going to pay for the entire 40s. So out of the 40, just go ahead and use the 30 that you need for the project. But how much are you paying to the supplier? You are paying for 40, not 30. So 40, the cost of that 40 liters, meters, is it meter or liters? Let me confirm again. Yes, liters. So the cost of that liters, yes, the cost of that 40 liters is what we are going to consider, not 30. All right. So liters. Okay, then let's move to the next one. So we are done. I think have we stated our assumption on that? No, for material B. Okay, let's give a paragraph on material B. Or let's call this one material A. let's say this is material A, then material B. All the two of them, yeah, there are different bullet points. So, okay. Let's move to the paragraph. All right. Material B. I will say though 30 liters of material B is needed to execute the contract. However, supplier can only sell a minimum of 40 liters at 90 naira to the company. Therefore, the total cost of 3,600 naira will be included in the contract. So please, there's no need for you to comment on the balance of 10 liters. You have nothing to do with that. Just ignore it. Don't waste your time and be commenting on 10 liters. It has no implication on the question. Okay? So that is that. Yes, still on that same paragraph, you are told that 60 components will be purchased from ICAN at a purchase price of 500 naira per component. Component is similar to material. It's a bought-in. So how do we treat that information? Is it relevant or irrelevant? Yes.
Come again.
The component, we are told that 60 components will be purchased from ICAN at a purchase price of 500 naira per component. So is it relevant or irrelevant?
It is relevant, sir.
Relevant, sir.
It is relevant.
Okay. So, of course, that is correct. I will then come here. Components. Here is components. 60 components multiplied by 500 naira. That should give us a 30,000 naira. Am I correct? Yes, it should. So let's go and state our assumption. So we are still on that number 2. I will come here, components. Okay, the total cost of the components of 30,000 naira for the total cost of 30,000 naira for the 60 component. Let me reframe that. The total cost of 30,000 naira for the 60 components. For the 60 component is relevant and included in the contracts. Okay, that's that. No need to talk too much. Let's move to the next one, please. Number 3, a total of 240 direct labor hours will be required. So to execute this contract, 240 direct labor hours will be needed. The current wage rate for the grade of labor that we work on the contract is 110 naira per hour. Okay, Tumpulu currently has 75 direct labor hours of spare capacity for this grade and are being paid under collective wages agreements. The additional hours required will be sourced by either. Now, before that, let me explain this paragraph. 240,000 hours will be needed to execute the order, but we are told that currently the company has 75 direct labor hours of spare capacity. Remember, whenever there is spare capacity, relevant cost is equal to 0. So out of 240 direct labor hours, there is idle capacity of 75. So 75 minus 240, that will give us 165. That means what you need to calculate for is 165 direct labor hours, not 240. So in this case, now these workers or these employees, they are on the contracts on a grade of 110 naira per hour, and they are on collective agreements. Whether you execute the order or not, you are going to pay them. All right, that is the implication. The labor cost for the employees will be incurred whether this project is executed or not. That 110 naira per hour is irrelevant. But examiner is now telling you that the additional hours required will be sourced by either that 165 out of the 240, 75 is spare capacity. Okay, so that means you need 165 direct labor hours. You are now told that this 165 direct labor hour will be sourced by either overtime at a cost of 140 naira per hour, so, or employment of temporary staff. When you employ additional staff, that means additional cost will be incurred, which is 120 naira. That is also relevant. Overtime of 140 is relevant. But this temporary staff, because they are not experienced, will require 10-hour supervision. That's an additional cost to be incurred on this. So all you need to do generally on this, let's quickly do that so that we are not because of time. Let's come here. What is that again? Okay, so labor. Under labor, we are going to select the lower, it's a cost. So you have to select the lower cost. So under labor, you choose the lower of number 1, overtime. If the company wants to work for overtime, so out of the 240,000, out of the 240 direct labor, 75 is idle capacity, and you don't pay for idle capacity. Therefore, you multiply this, that will remain 165. So for overtime, the overtime cost is 140 naira per hour. So multiply by 140 naira. So this will give us, what do you have there? 165 multiplied by 140.
23,100.
23,100. Here is 23,100. You close it. Then we move to number 2. Additional labor cost. Additional labor. Under additional labor, there are 2 different costs. One, employment of temporary staff. temporary staff. So you have 165 direct labor hour at a cost of, what's the cost? 120 naira. At a cost of 120 naira. So what do you have there? 165 multiplied by 120.
19,800.
19,800. You are not told that, including in addition to the temporary staff, there will be supervision because the temporary staff are not experienced. So you need a supervision. So supervision cost of 10 hours. The supervisor will spend 10 hours at what price?
180.
At overtime. Will be paid overtime of 180 naira. 10 hours multiplied by 180. That's 1,800. Add the two together. What do you have there?
21,600.
21,600. That's the total additional labor cost that will be incurred. So you are supposed to select the lower of the overtime of 23,100 and then 21,600. You can see that 21,600 is lower, isn't it? So you then say here will be 21,600. Okay, so you don't have anything to do with option 1 again because that one is higher. Is it clear?
Yeah.
So let's go and state our assumption. Labor. Number 3, labor. Okay. The current wage rate of 110 naira is irrelevant because the staff will be paid irrespective of the decision taken on the contracts. Whether the company execute the contract or not, you must pay. Therefore, it is irrelevant. However, the lower of the overtime costs of 23,100 and the additional labor costs that will be incurred of 21,600 is considered. So that's why we choose 21,600 since it is lower. Let's go to the next one. So the next one is bullet number 4. We're almost there. 25 matching hours will be required. 25 matching hours will be required. The machine to be used is already leased at a weekly lease rental of 6,000 naira. Now, how do we treat that information? 25 matching hours will be required. The machine to be used is already leased at a weekly lease rental of 6,000 naira. That's 6,000 naira. Relevant or irrelevant?
It is irrelevant because it's a sunk cost.
It's a sunk cost, okay? Because the company told you that it's already leased. All right. Actually, it's a committed cost. All right. It's a committed cost. Committed lease is an example of a committed cost. Whether you execute this project or not, the company must pay that 6,000 naira because what is written in the lease agreement, it is binding on the both parties, both the company and both the lessee and the lessor. So irrespective of the decision taken on this contract, that 6,000 naira must be paid. even if the company has not paid the money, because it's already written expressly in the contracts, it must be executed. So it will not change. It's a committed cost. So you ignore it. So let's put it down. Yes.
So there's a tiny line between a sunk cost and a committed cost.
It's not, they are not the same thing.
They're not the same thing. Yeah.
When you say sunk cost, sunk cost is something you've already spent, you've already incurred that cost. So it's different from something you have committed to. Say, for example, now we have an agreement. You are a student. I'm your tutor. Okay, we have an alignment that you are going to pay me. You are going to pay me 6,000 naira.
Okay.
You are going to pay me 6,000 naira towards the end of before the end of the diet. So that's an agreement between you have written to me that you are going to pay me before end of the diet. So that one is already written. So so it is binding on you for you to pay that money. You have no choice. So you can see the company, you have not incurred the cost, but you have committed yourself that you are going to pay it. There's an obligation. That's the right word, obligation.
Obligation, okay.
But it's different from the sunk cost.
Sunk cost, okay. All right, thank you.
You are welcome. So let's put it down. Number 4. Okay. Lease rental. So the lease rental of 6,000 naira is a committed cost. And therefore irrelevant. Okay. And therefore irrelevant to the calculation. But examiner told you that it has 40 hours per week capacity. That machine has 40 hours per week capacity. The machine has sufficient available capacity to complete the contract. The variable cost of running the machine is 70 naira per hour. Of course, the 40 hour we are less concerned because what examiner is telling you now is that the company has already leased a machine at 6,000 naira. That machine has 40 hours. Out of these 40 hours, you need only 25 hours. But because that 40 hours that cost 6,000 naira is a committed cost, we are less concerned with it. It's not relevant. So examiner is now telling you that the variable cost of running the machine is 70 naira per hour. That is the only relevant cost that we are going to consider. Just take 70 naira multiplied by 25 machine hours that is needed. That's it. So I can then go further to say the only relevant cost to be included in the contracts for the machine is the variable cost. Is the variable cost of 70 naira per hour. Okay, it's variable cost of 70 naira per hour. That's that. So let's go and do that. So machine under the machine, we need 25 hours at 70 naira. So what do you have there?
1,750.
1,750, 1,750. That's that. Okay. Let's move to the next one. Okay. Okay, they can just say variable cost of 70 naira per hour at a total cost of 1,750 15 naira. That's it. So the next one, which is the last one, number 5. The company's fixed overhead absorption rate is 200 naira per direct labor hour. That information, is it relevant or irrelevant? Fixed overhead absorption rate of 200 naira. Relevant or irrelevant?
Is it relevant?
Pardon?
Irrelevant.
It is not relevant.
Why?
Because the general cost is a different thing if it is a variable fixed overhead.
Okay, it is true that the company fixed overhead absorption rate is an apportionment. Any absorption, see, you can see you incur this overhead and then you now absorb it. You absorb it on direct labor. All right, it's not a future cost. So irrespective of whether this project is undertaken or not, whether this contract is undertaken or not, that cost will go on. All right, so it's irrelevant. All right. So any overhead absorption, just ignore it, or apportionment, just ignore it. It's irrelevant. All right. So move on from there. Number 5. So I would then say fixed overhead absorption. So this is irrelevant. This is irrelevant because it is not a cash flow, or irrespective of the decision taken on the contracts. The fixed overhead will be incurred. Okay, it's a mere distribution of costs. It's not a cash flow, so it's not relevant. All right, so what else do we have in the question? I think that's it. That's it. So let's sum up all what we have calculated. Let's determine the total. Add up everything. What do you have?
70,700.
70,700. Thank you, Alexa. This is the total relevant cost. That's it. That's it. 15 marks. You can see we use 1 stone to kill 2 birds. As we are doing the calculation, we also state our assumption, which made life easier. All right? It's made life easier. And that's why it is expected on the day of your exam, so that you don't forget. When if you are carried away with the calculation, you may miss a point when you are stating your assumption. But if you are doing one calculation if you are doing your assumption on the basis of the bullet or additional information I've given to you, okay, so it will make it, it will still be very, very fresh in your memory, so you can easily state it clearly the way you have solved the question. So that is for that. Then the number B part of the question, you have to discuss the factors that will be considered by ICAN to determine the opportunity cost of the component. So no need to, this one I just written. I will share with you shortly. Let me just, I don't want to talk too much on that. I would have loved to solve more illustration, but it's almost time. However, let me just 1 minute. Let me stop sharing. Okay. Okay. Now, like I said, on the question on the Tompolo, okay, let's do it this way. I will forward it to you because of time. I will forward you the response to that requirement B, okay? So that that has to do with opportunity cost, okay? So that will be the end of the class for today. By the grace of God, we meet again next week. However, Mr. Shiwaju will be taking you tomorrow. All right. Thank you guys for your time and for participating in the class. See you next time by the grace of God.
Sir.
Well, thank you, sir.
Yes.